Okay, hello and welcome everybody to the white belt. I think I'm recording the right screen. Yeah, seems like. Let me pull up the screen sharing for Discord as well. So you should be able to see the screen. Yes. The internet is unstable. Yeah, I also changed mine to my phone because Starlink sometimes simply disconnects, especially like when it changes satellites because it connects to the next satellite. I have some kind of lag sometimes, and while streaming, this is not very helpful. So, about my thoughts to the market. I mean, BTC's at the range low. Um, it's nothing I would want to long here, to be honest. Long itself, but I mean, it's at extreme range low. It's at demand, and so it acts as confluence for other longs in the market, in the crypto market, and I have those two shorts still, and I try still to squeeze this short lower, and I TP'd 60% of this other one yesterday, simply because we are at extreme range low, and it simply makes sense to do that while keeping this. And ETH entered its level, so I'm long ETH, and also we have confluence on different ETH charts with ETH Euro and ETH GBP, which is nice. So a lot of things lining up. Also, if we look at Tether, we are at extreme range highs. We had somewhat a double top here, but it's extreme range high, so it's more optimal to be on the buy or on the long side. We have the stable CD chart, which still has no history, but it's in those levels which I marked out earlier. And we had a big swing failure pattern on USDC. While the only thing that really is missing, or let me talk about totals first. Totals are also demand, back at demand, total 2, back at demand, and in the level. We closed the daily below this refined level, which is not ideal, but I see this whole area here simply as demand, and this is just a refinement. So it's optimal to be on the buy side, on the long side, as same as it was optimal to be on the sell side up here. And still, I mean, it could still fail, right? So there is no certainty, there will never be. Losing this area on total 3, like a lot more aggressive, so we have a bigger candle below. Not perfectly ideal, but I mean, we talk about a higher temporary level, and so several closes are to be waited for. The only thing that's really not lining up that great is ETH BTC. We are in this demand, right? Technically, we are in a buy zone, but at the same time, I would have loved to get this level because now it's below and it acts like a magnet. Um, and we have also not closed below the 0.5. So it is kinda more probable, or it's like we have more confidence for being long, but it's not perfect. But you will see it's never perfect, especially like looking at 10 different charts. It will never be perfect, or at least I haven't never seen that every single chart is lining up and you have 100% alignment. There is always something that could be better. There's always something that could still hit. And so at some point we just need to pull the trigger. We need to be brave. And I say it's it's enough confluence to like give it a shot. And I've also taken those altcoin trades with which I shared in the group, which are basically, so normally I would probably spot buy them, but because I think we are entering a bear market, I think it doesn't make sense to buy them spot, put them onto a wallet, because I don't see a future where I hold them like 3 months or something. I rather think we have some kind of counter trend bounce, if best case maybe into the 0.5, and for that a per position will do as well. And so yeah, I'm long, and this adds up to be percent, 1% here, and also 1% here. So I'm basically long 3% crypto while still having this big short running. And this is also, these longs are also hedged for my short. I don't need to TP on this one because if it goes up, my longs will print. If it goes down, my short will cover. This is the main idea. I see everything I take in one single market, like in the crypto market, everything is correlated somewhat. And so I try to prepare for everything with taking several positions. And as said, I think probabilities are in favor of trying a long here. I mean, it's red on the day as well. And if we look at lower time frames, thing is we have broken this local downtrend. So there's a case to be made to just go long. And I mean, it was like totally expected that we're going to reaccumulate here for a while. The question is for how long, and can we see some strength? So ideally we range a bit, we start making a higher high, and then come maybe back to the level, retest it and go higher. If there is just weakness, like no reaction at all, simply weakness, breaking down, breaking every structure, no real reaction, yeah, I also will probably simply cut this long a little bit earlier, simply because then I don't see a reason why I should pay a full stop, because if we lose this level, it's very likely that we go for the next one on ETH BTC, and if it's 12% away, and it's not BTC that goes higher from here, but both going down or ETH going down, it's probably like failing quite aggressive this level. And so invalidation is clear. I'm just pulling the trigger, accepting the risk, and yeah, now I will wait and see. Yes, Chinese New Year. Go for it. What's the question? Hello, bingos, by the way. Hard to believe it will be a big push to the upside. He's very sure of it. Some others say bear market is here. Yeah, but one does not rule out the other, right? So if you look at prior instances, like for example the 2022 bear market, we topped, we went down aggressive like 50%, and from this point on we pumped 60% on ETH, right? And I mean, look when it was. It was January to February to March, April. So it was basically Q1, and it was basically Chinese New Year, right? And so look at here, Chinese New Year a year before was not that bearish, not that bullish, right? 21 February, big nuke. And look what we have now. Like we had December, January, February, big nuke, recovery from there. Now we nuke into Chinese New Year, so why not a recovery from there? So let's imagine like we have just some bounce into this or something like that, and we go down into Chinese New Year, maybe to here. Wouldn't it be so unrealistic to expect like a 50% bounce or something? Um, this is why like you need to be careful how he like says things, because if Monitor says like A bullish Chinese New Year does not mean new all-time highs, does not mean like your portfolio will triple or something. It simply means bullish PA, higher time frame bullish PA, and a counter trend bounce always happens on the even on the aggressive downtrends. We have some kind of outperformance or like counter trends, and they can be traded, they can be swing traded. And look at what people probably thought, like it went up, we went down back to this demand, and from there it pumped like 50 to 60%. How many people do you think like flipped their buys and got bullish again before the biggest legs to the downside started? And such things are important. So just because it's bullish doesn't mean like new all-time highs or anything. And same here, we could go back to this demand. Everybody gets really bearish, maybe not here, maybe even lower, and then we have a big counter trend bubble, and this can be traded. I mean, you look at the 5 minute chart. The 5 minute chart is pretty erratic. So we can still like go a little lower. Let's check it out. Go a little higher, go a little lower. So I mean, it's the 5 minute chart, and you need to consider that if we have a higher time frame reversal from here, like 10% pump or something, um, this PA will probably take a little more than, I mean, ever since we entered the level, it's 20 hours. We talk about a higher time frame level. So this could go on for what, like 2 days or something, right? So if you look at the 5 minute, don't forget that you look at the 5 minute. Look, it's just one single touch on higher time on higher time frame. It's just one spike in the level. Look how long it usually takes before a massive reversal, right? It's very rare that we just tap once or just do a V-shape reversal. Usually we reaccumulate for some while. Well, so here we had, for example, maybe a similar situation. I don't know if you guys remember this long here. And we tapped it once, quite aggressive, and we even retested it one, two. Not really. We didn't retest the whole level, so I give you that. It was basically a V-shaped reversal, but still before the real move unfolded, it took a full day ever since the level got touched. And so if it takes another day or what, it wouldn't be that unlikely. And everything that happens on the 5 minute, as said, this could be very erratic, very random. Even if we undercut this low again, doesn't really mean the level needs to fail. I mean, for going long, we need to go long at some point, obviously, and it would be nice if we don't undercut this low. But even if we do, something like that could also happen, right? It's lower time frame. On lower time frame, everything is possible, more or less, and you will very often get somewhat like something like this where everybody is still bullish somewhat and going long, and then this happens and everybody's like, okay, it's over now, I need to cut, I need to cut, and then suddenly it just goes up, no pullbacks, never looking back. So be aware of the context. But yeah, ideally it would be would obviously be nicer if it's just going up from here, easier to trade. um but yeah, we will see what this brings. I mean, the big volume here and the absorption candle on the daily give me a little hope that this is going to work. But as said, in the end, it's probabilities. That's why we manage risk. That's why everybody's managing risk. So that's also something I spot again and again and again in people. They look for the perfect refinement and for a perfect answer so they can dodge the uncertainty. But you can't really. You can't. It's always going to be uncertain. The only thing we can do, simply put, is once we lose this level and we really start closing below the level, we might cut our trade early. So if this is 1 hour and we decide to cut it early, we can cut it for 0.5 hour and we save ourselves some money. That's why I like to play them wide, simply because I can't get wigged out. And if I get the close, I can still cut early, pay a little less. Good. So, so much to the crypto market. The only thing I don't really like about those longs is lower high, lower low, lower high, lower low. Usually, if the SPX starts doing something like that, it's um it's not that bullish for the market, for the rest of the risk market. I mean, it doesn't mean crypto market couldn't pump from here, as said. That's why I'm long, but once something like this starts, it's usually not the best environment for risk assets. But also, it's kind of slow this time compared to all other tops, and it's somewhat pretty slow. Maybe we get another sweep of the highs, consolidation, breakdown. Who knows? Who knows? As said, trying to prepare for everything. The only thing how you can dodge uncertainty is by having multiple positions. Like I have my short and I have now these longs, and it doesn't really matter what happens. It's simply good for me, right? So goes up, nice. Goes down, nice. Doesn't really matter. But in the end, I still don't know what's going to happen next. Hmm. Aristo, I've seen you had also a question in the chat. I didn't really see what it was. Maybe we can have a look now. Ah, MicroStrategy, right? MicroStrategy. Let me check. I don't know. I mean, it's correlated to crypto, right? So it's no surprise, really. We have a big demand here. You need to consider that many people are going to see this as demand, so this is not something very hidden, but at the same time, it's demand. It's demand, but it's kind of wide. We have some refined level here, right? So and also let's pull it on the full screen. It's definitely in premium discount, sorry. So this could be something. It's definitely Confluence for BTC. I think they two are somewhat definitely correlated, but not necessarily like moving because of each other, like people sometimes think. But it's definitely good to see as Confluence being in this demand, even being in the refined area here. And I mean, longing it. So again, this is like the question of what are your positions. So for example, I have now 3, 4 crypto longs, 3 actually. And MicroStrategy is basically also a crypto asset. So why would I add more risk now to my portfolio? Even and especially because I don't really know how MicroStrategy behaves because I never traded it before, but I do trade crypto for a long time. So for me, it's putting in more risk. If I would now open a long here, I just would add more risk to the crypto idea. I see it as Confluence, but I don't necessarily would take a long here. So for example, if I don't had any other positions, so not trading crypto at all, I would maybe consider like building a position here. It's definitely not that bad after a 60%, I mean from the all-time high more, 60-70% correction. And then something like this could be targeted definitely. Because also here price is usually not going down in a straight line. We have some kind of counter trend moves. So back to the 0.5 or something would make sense. And you can also simply look at prior instances. I mean, this is probably bad prior instance to take as example. yeah, here from this demand, it bounced 70%. You see it's simply an order block after a 70% correction. Maybe it's doing something similar, but for a higher time frame buy, I would probably wait for something bigger and like BTC is probably the best confluence you can get there. So it's maybe something like this. Going back here. But for same story. I mean, I don't know what your plan is, but for me, a counter trend bounce makes sense at some point. But I wouldn't see this as that's why it's looking so weird. I wouldn't see it as great higher time frame buying opportunity for the next 2 or 3 years. Maybe something great buying opportunity would probably be something here. But this will all depend on BTC. Once BTC is around its level and MicroStrategy is somewhere here, might be a nice higher time frame buying opportunity. And from here, yeah, as said, simply a counter trend bounce or something could be traded. Or maybe it's the absolute bottom, right? I only talk like out of the perspective of my bias. Could also be the absolute bottom, but I don't see it as the more likely scenario. Especially because BTC is still like in its top range, right? So according to BTC, we are still in higher time frame premium, and this is a stock that is basically only famous for having BTC, trading BTC, holding BTC, whatever. So it will all depend on BTC. And then the question is, I have more experience and more data trading crypto, so I simply stick with trading crypto. Maybe in the bear market it makes sense to buy some MicroStrategy because it moves more aggressive than BTC, or at least as it did. There's also a question if it will repeat that again, because now everybody knows that. So yeah, as said, if you don't have any crypto exposure, might make sense here, but for me it doesn't. You can also look at coin. Losing this demand. No, not completely actually. Not completely. Also not ideal. I also see, another thing that's not really lining up for being long crypto is the whole like news sentiment kind of stuff. If you look at news, it's still bullish crypto, bullish Coinbase, bullish CBDCs, stablecoins, I mean, sorry. So I think it's definitely not wise to be all in here, absolute bottom kind of thinking alt season next. But as said, also here we have some imbalances on the way down. Filling them would make sense. Would also not trade this stock, but also high time frame 3 drives here, right? Would not trade the stock on its own, but it's confluence for my crypto position somehow, somewhat. I hope this answers your questions. Do you trade crypto, by the way, Aristo? No, you don't. Only forex and starting with stocks. So what's the reason? So you simply want to focus on one thing first, or what's your reasoning? Yeah, that's true. The confluence thing. Yeah, sure. Let's talk.
So,
Hey.
ANC. Um, yeah, so based on your question, I started paper trading with crypto, but I was literally like going over a bunch of altcoins, and I I I know that's well, it's not how it's supposed to be. Um, Knowing that because before I wasn't checking any kind of confluences at all, checking um, other graphs. But then I learned that if you want to be successful, you need to check for them to find the confluences. And then I was just getting super overwhelmed, so I decided to stop it. That doesn't mean that I'm not interested. I'm definitely very interested, but for now, I just feel like it's a lot. Uh, so that's my take. I mean, what if I feel like even though there's a lot, it goes very related with news. Uh, I feel like most likely you don't need as many confluences. So that's why I'm doing forex, but definitely the movements are way slower, and I feel like based on how I am and the way I like to work, I feel like maybe crypto would be better. But it's all about. I feel it takes a lot of time and understanding of like different like charts and keeping track of those charts. So for now, I'm just observing and learning, obviously, but I haven't like pulled the trigger with trading.
Mm, mm. Yeah, and it makes sense, like knowing yourself, knowing what you're good at, and if you're, for example, simply overwhelmed with the confluence stuff, um, it's totally fine to simply go for something else. In the end, it's about RR, about percentage moves. It doesn't really matter. The only thing I really like about crypto is, or I enjoy more than on other markets, is the user interface of the exchanges because you have so much flexibility with the leverage and all that stuff. You can remove the margin.
Yeah,
But other than that, you know that I like trading stocks more, and I also enjoy the closing times because I can really like shut my mind down, enjoy my weekends a lot more, if I want to. I mean, right now crypto is exciting, so I have no problem with like trading it and checking it. But sometimes after weeks, and I want to log off, and then there's action on the weekend and all that kind of stuff. It's harder to really shut the mind down, but obviously also the opening times create more opportunities, if you can trade it 24/7. But that's not really like the case for me, swing trader. I mean, as said, I wait for higher time from opportunities. As said in the beginning, right now crypto is very exciting, so that's fine. So I look to enter positions. But other than that, I have at least as many opportunities in stocks as well. Um, and yeah, so it's also kind of wise from you to decide for the thing that's working best for you.
yeah. But still, I feel like I have a lot to learn. And I think it was good the conversation we had last week. Um, I just feels like it's hard to find a consistency, man. Um, but I'm gonna be, focusing on like higher time frames, uh, and with that, trying to understand what is like the different uh, the ideas or like the different steps. I need to find my edge and then understand which one is the one that is working right for me in terms of like finding the A plus setups. I actually had the chance to read through Matt's, I think that's his name on Discord, conversation that we had in the Discord for White Belt for
Mm,
discussions,
mm,
and I think that he's very accurate. And based on what I see, he's also getting started. So like it's nice to get like feedback or like getting like insight from someone who is also like learning the ropes and like understanding, and like he's posting literally everything that he's doing. So that's pretty cool. I think that's helpful.
mhm, mhm. Yeah,
uh,
but this I can see this helping people a lot, and this is what I told him. Because I worked with him together for quite a while, and I was always impressed by his analysis and stuff like that. And I said, many people will probably be find it very helpful if he shares it, and now he starts enjoying sharing it, and that's great. I really like to see the
okay.
conversations.
he gives good feedback, and I like that. And as you said, it's part of also like being in a community that we help each other. So obviously you're there and you help us questions, and we have these like bi-weekly meetings or like sessions, in which is I'm loving it, and I think it's awesome. And at the same time, the fact that it this helped build a small community that we care about each other, and like we try to give tips and like understanding and like sharing knowledge pretty much. That's pretty useful, and I like it.
Great, great to hear. And I also see that
Um,
it's evolving. It's evolving, and it's evolving in something very, very good.
Definitely. I have a question,
Mm.
and it's more like TA based, um, especially when uh, we say that weeks don't have um, there's no liquidity in weeks. Um, let's say if you pull a graph and you're like 1 day, and you're gonna have any candle with weeks, right? At the end of the day, if you go to a lower time frame, this week is gonna have, I mean, it's gonna have liquidity. So I get confused whenever I'm charting and I see, let's say, a order block with a very big engulfing um, candle. That makes me believe that there was movement there from money makers. So I'm thinking, okay, this is confluence, right? What I try to do, I try to find um, order blocks. Sorry, I try to find hidden order blocks or breaker blocks, and then I want to find confluence with other blocks, with order blocks in higher time frames, and that gives me, like an idea that most likely that in that point there could be a reversal. So like when it comes to weeks, if you check a candle at like let's say 1 day, and then you check and then you mark the week, and then you go to lower time frames, you can find order blocks there. So there's liquidity there, isn't it? So this confuses me a little bit.
Hmm. A very simple exercise or something you can use from TradingView is volume footprints. This will help you to understand where the liquidity really is. And it's not simple as like wicks have no liquidity because, as you said, if you just change time frame, it's gonna look different. But only so that you understand what candles are made
Oh
of.
wow.
So, for example, you see on the weekly, this thing here is a wick, right? This like you see the
Uh-huh.
candle, you see the body, and you see the wick here. And if I go to the two
Uh-huh.
day, the wick is basically our level, right? So we have the order block here. You see that? And on the
Yes.
weekly, it was a wick. And so that's why we also look at different time frames, but it's not as simple as the wick contains no liquidity because, as you mentioned yourself, it's more than that. The thing is, FVGs are usually made of no volume at all, simply because somebody market ordered here and he just market ordered price higher because he just ate the whole order book to push price up here. You see, like most orders in this candle got filled up here. And then again, big FVG, almost no volume within this area, and see what price does. Price comes to fill these gaps, but reacting really it does from those areas where a lot of like volume profile have been. So
So
usually those empty areas get skipped a little bit.
okay, so just for me to understand, the little like horizontal lines, this is liquidity.
This is buying and selling. Yes, this is like you have on
Okay.
one side you have buying and limit selling, and you have market buying and market selling. It's a little more complicated. If you're interested in the theory, just have a look. So if I go closer, you will see
Oh my
here.
God, that's pretty cool.
Yeah, and this is even a free thing from TradingView if you have premium. The data is only
I do have
estimated,
premium.
so I be careful with that on TradingView. So ExoCharts, for example, provides better data. But to learn that like the theory of what a candle is made of and what you look for basically, it's actually kinda very helpful.
Okay, so people usually don't trade based off these, meaning I don't see anyone pulling trades or like pulling up charts just like that. right? Like, do
there
you
are.
ever check? Here's my question: do you ever check these before taking a trade?
I have traded a long time with like order flow data, but by now I simply see more or less where volume is created by simply looking at the candle chart. But a lot of this was due to me like learning all of this and staring at this on exo charts and stuff like that to really see in real time how it behaves, especially in lower time frame. And there are people like really trading with this volume footprints. What is this other thing called? Time range profile kind of thing. So there's more, but this asset helps a lot to understand what the candle is really made of. And if you find edge in there, as I said, there are strategies using this for trading. I don't see like a big advantage in including it into my strategy, but it's very helpful to, as I see how like there is nothing within here. This is what means by
Uh,
the FEG is empty. You see the FEG is empty here, but here it's not. So there was like if I go to lower time frames here, we will probably see some kind of consolidation within this weekly FEG. And you see what price did. Price came back, touched this, and then it went higher. And here, price simply fell through the level. You see here is like pretty much nothing. So price simply fell
uh-huh.
through and touched then the lower area here.
Do you mind selecting one part and we can go a smaller time frame just to check it out?
Yeah, let's take this part because we have an FVG, right? So we have this FVG, we have this. So now go to the daily. You see the FVG here is made of more smaller FVGs. But those like
Uh-huh.
those were you see they need to make a lot of effort within here. So there was, even if I go even lower, you see price grinded up. So it was not like a very like you see even on the daily on the 6 day, sorry, even on the 6 day price gapped here. And this is why here was the big gap of this FEG. You remember here was pretty much nothing. But here with this consolidation,
Uh-huh.
they needed to put in more effort. So they need to absorb buyers as sellers in this case. And we can check why that is. Maybe it's simply because we hit the supply here. So they needed to work harder to make it work. And they pushed price through. And then it came back and retested this area, which was not completely empty. And this is what is meant by empty FEGs and not empty FEGs. And an empty FEG is not simply, or a not empty FEG is not simply just something where is a block behind. So it could also be somewhat like this consolidation here.
I see.
You see here, we had this consolidation. It's not. Hmm.
You said you have access with this with a premium subscription, right?
Yeah.
Okay.
Uh, no, it's looking shit. Give me like 700. No, 1 hour is too small. Maybe in 2 hour. It's up here. So you have time price opportunity, session volume profile, and this what we're looking at is volume profile, volume footprint, sorry. Um,
Yeah, I don't have it. I'm just gonna buy it now. Like it's an 80% discount for premium, so for Black Friday. So I'm just gonna buy it.
it pays off also for the alerts and stuff. Um, yeah, and you see here this consolidation was pretty much our reversal. And
Uh-huh.
now if we go for even higher time frames, we will probably find something. So you will always find some kind of reason. It's a little bit strange to navigate this chart if it's
Mhm.
like that. You see, let's turn the normal candles on. Because I remember there was something, I think it was a 4 week. Yeah. So it was this 4 week basically. And so this was supply, right? So let's mark the supply. So they had to work harder to push price through here. This is why there is, okay, not on this chart, but let's go back to the weekly. You see, they needed to push price through this area. See how there's a lot of volume, and here was not, simply because here was also this move down, and they had no effort, or they had no, what's the word, difficulties to push price to here. But here price started consolidating, so they needed to put in more effort, and that's why price started consolidating and came back. And it also closed above the 4 week, filled it completely. You see this 4 week block, and then it moves higher. And this is not because of the blocks. This is because of the underlying mechanics of buying and selling, of order flow, of how they move price. And you need to consider that if they move price, if whales or institutions move price, it always costs them something. So to create moves like that is expensive for them, because somebody needs to move price higher against aggressive sellers as well, because people sell into this. But they wanted to push price up here, for a bigger target. So they invested in this kind of move. For them, it's like a business investment. They invest into this price move to attract more buyers in the long run, and to offload different positions to make more money, like asset in the long run. For them, it's not about like short-term profits often, but they need to reinvest, create this move, offload up here, and this makes them more money than simply like letting price down here and letting it roll back over. This is how
Mhm.
like an organic like market works, because as said, the real demand for ETH is like probably only a tiny fraction, and the rest is wash trading. The rest is institutions, whales that are only moving price to attract then buyers or sellers uh, on the retail side.
Yeah, that's crazy. And if you go with a regular bar chart, do you focus on volume to see how hard it was for institutions to push the price up? How would you see it here?
Yeah, you remember when we talked about like volume spread, which effort made, and
Uh-huh.
result. So we have result and effort made, and the volume bar on higher time frames, it's a little weird to look at because those bars look the same. But here, for example, right now in our level, you see we have high volume, above average volume, but the candle body is actually kind of very tight, and we have a big wick at the downside.
Uh-huh.
So a lot of effort was made, and we have a small result. To really see what this volume is made of, we need to go into here, into lower time frames, and you see the biggest volume candle was this one, like the move into the level, and half of the candle is a wick at the downside, and it's lots of effort made, but the result is not that big. Now we can use the new knowledge we have with the I always forget the name, volume footprints. We have negative delta, but we have at the same time not that great of a result, right? So you see, we have with where's an example? Maybe we can make my point better on even lower time frames. Let's see. Yeah, even bigger wick. So you see, we have a big negative delta, and the result is not that great. So we had a lot of absorption here at the lows. So this is the volume spread I was talking about. This is what we want to see, and I have simply, now I have just like made my point. Um, so you remember, like on the daily, I said to you, okay, look at this big wick at this above average volume. This is volume spread. This is
Uh-huh.
something we want to see in the level. If I then go down to the 30-minute, it just confirms. It would be, if this, like this one big high volume candle, if this would be simply a big red body, like the sellers won here through the level, then it's not volume spread. But like this, it's a volume spread. And then you see we have from here on buy volume taking over. So I think actually the level looks from an order flow perspective kind of great, but a big but actually, it always needs to be put into context, because simply put, we have also the same situation here. I mean, the body is way bigger, so we have a similar effort made. You see those two volume bars, they are pretty much at the
Uh-huh.
same high, and
Yes.
we have the same volume, but we have way bigger result, still an absorption wick, but way bigger result. And now look at this candle. So compare it, like how, look how big this candle is compared to this one. Look how big
Yeah.
this body is compared to this one. So this is definitely cleaner and better volume spread. But at the same time, this is also a little bit of volume spread. But it's not the perfect reversal sign. Same story here. You see, but the body is even bigger. And it's actually a very nice example because the volume gets lower, or here it's the same, but like lower from here. And this means there's less effort, but only little less. And look at the effort made here. Like effort made, big result. Even though it's a big wick, but look at this big body. So they push price down 12%. I mean, overall the candle is 20%, 23%, and the candle is 12%. Here, with a little less volume, the candle is already way smaller. So the candle is already only 15% and it's 8% body. And here it's even smaller because it's only 8% and the body is only 2%. And we have similar effort made, but we have way less result, which means, on the other hand, we have a similar effort, less result. So somebody with a lot of buying powers on the other side, and this could mean sellers are running out of steam simply because they
Okay,
put in the same amount of effort, but they have less result.
that's nice. One question. You mentioned delta, and it was a negative delta. I apologize for that, but I don't know what delta means.
Delta is the difference between buyers and sellers. Simply put, if you have
Ah,
a
okay.
100 buyers and you have or you have $100 buyers and you have $50 sellers, you have a delta of plus 50. And then the question is, with this plus 50 delta, is like the result positive or negative? Because if we have more buyers than sellers, on logically speaking, like the result should be positive, right? We have more buyers, so the result should be positive.
Uh-huh.
But in a lot of cases, or not in a lot of cases, but sometimes there is a divergence between that because you have more buyers, but the result is still negative, which means there is a big limit seller somewhere, which is not visible in delta because delta is only reflecting market orders. And so you have a divergence. And this could also be used as confluence because you see, okay, there is a big limit seller here, which pushes price down. So it's not great confluence for my long because somebody with real buying power, somebody who's using limit orders, is holding price down against those aggressive buyers and they get absorbed. The thing in crypto is you have, unfortunately, 10 different exchanges. You have spot, you have perps, you have USDC, you have USDT. The data is
Oh,
not very reliable because oftentimes you will once see one data set here and price is moving on the other in the other way, and it's not the cleanest signal simply because the price movement comes maybe from spot, maybe from USDC, maybe from God knows what kind of wash trading they have um, or use. So it's in crypto not the cleanest kind of signal, but like from a very theoretical point speaking, if you have more buyers, you should have a positive result. If you have a negative result, it means there's a limit seller, and limit sellers are usually the ones with real like power because a whale very rarely uses market orders, only if he has a bigger interest in mind. If you, for example, if you're a whale and you want to build a position here of like let's say 50 million dollar, you don't just market order because if you do that, price probably immediately jumps up here, and you don't want that. You want to build a steady position. This is why price consolidates. They have the limit orders here if they want to enter, and they need sellers to sell into their hand, into their position, and then from there on, they can then push price higher. And for that, they maybe use market orders, they maybe squeeze shorts, whatever they do. They want to have it as cheap as possible and as stealth as possible.
okay. Oh, okay, makes sense. Uh, when the delta, going back to the delta, when it's positive, it's because there's more buys than sells, and when it's negative, it's because there's more sells than buys.
Market buyers and sellers. Delta is only
Exactly,
reflecting
market.
market orders.
Okay, okay. And in this case, okay, based on what we're speaking, whenever there is a lot of volume and you see that the wicks, sorry, the candles are getting smaller, it means that there's someone trying to push the price up or there's more resistance. So consequently, there could be more orders that they're absorbing the sell side in order to, well, mm, for now, it's just absorbing the sell side of it.
Exactly. This is what the picture looks like right now.
And
And
you, so whenever you're, let's say, when you're placing an order, um, you go into, so you not only go based on like the TA, you also check volume, and then when you see, most likely you see that this could be also like a confluence in order for you to get into trade. Like you wait, you set up an alarm, you wait for the alarm to hit, and then you get into the the chart, and you go, I mean, you have your setup already, and then you start looking for these in order to see when you believe that, in this case, the sellers are getting tired, like they're getting exhausted, to eventually find a reversal.
exactly.
Okay. And do you ever place limit orders, or you
Yeah,
always go with market orders?
sure. No, no, I have a lot of limit orders, especially if I really like the level. I usually live a higher time frame level. I usually leave the limit order there because I'm not awake 24 hours. And on the other side,
Uh-huh.
I pay less fees. Um, but if
Okay.
I'm at the chart and if I then add size or if I then like trade live, I usually just go for market orders. But as said, be aware of fees and like if you have the time and if you trade higher time frame, limit orders simply make more sense. Yeah, from the fees perspective alone already.
Okay. Also, whenever I pull my volume chart, like the same as you have right now, I get a volume MA. A line is volume MA in which you can activate or deactivate. Um, I think we talked about this, but is this the average volume?
Moving average, exactly. This is like the moving average, and
Okay.
this is also useful to see if your current move has above average volume. This is important because for the volume spread, if you want to have a clean volume spread, you want to see above average volume, which we have on those spikes. So we had this one and we have now this one, and it's above average volume, and you have the volume spread. So it's technically, and you see, this is actually a prime example because we have low volume, normal like so like above average effort and the result is all right, then we have even higher volume and we have more result, so more effort, more result, and then we have the highest volume of those three candles but we have the lowest result. This is like textbook
Uh-huh.
volume spread.
When you mean volume spread by spread, what do you mean?
The spread of the candle. So technically speaking,
Ah, the spread.
the higher the effort gets, the bigger the candle should be, and the bigger the body should be. The bigger the effort, the bigger the
Yeah.
result. And it gets bigger, but the result gets smaller.
Okay. 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 Thank you. I like that. Um, I have, so the only, I don't know if that's US NAS, but I have a chart here. Maybe I can just show my screen if you don't mind.
Yeah, sure.
Uh, okay, so I was evaluating this trade, but then I came across the volume with the moving average, and so I see, well, the price is going down here, and there's big spikes here. I'm assuming that it's because of like the effort that they're putting, with this case to sell and to buy, in this case to sell. But then you have the moving average. I don't. It's hard for me to understand. Basically, it's hard for me to understand this. Like it's like it seems like very consistent in terms of like ups and downs in terms of the volume, and then it goes flat here. I don't even know if in 30 minutes that's something that you would look into based on what you were doing. I am assuming you could do it, or you should do it. Um, but then it's just hard for me to understand. This is the moving average, so basically it's giving you like the line is giving you the average of the volume per based on the time, right?
There's a very simple reason why volume looks like that. Think about it. Like, and I mean, think about time zones.
Ah, duh. Okay, this is night, and this is literally like okay. Never mind. Now that makes sense.
Most
People here
volume
are
is,
not working. There's like the market is closed probably.
yeah, we have pre and
No,
aftermarket. For that,
definitely.
open up your settings, please, really quick on the red set. Yeah.
Uh, settings. Where am I? Oh,
No, no, no. Do you have been there already? Like, yeah.
oh yeah.
And then
Sorry.
you go for canvas. Go for, or is it on symbol? Come on, go please for symbol. No, then it's on canvas, I guess. Um, no, it's not. Scales and lines. Status line. Where is it? Let me check on my chart real quick. Am I stupid now? There is.
They-
Ah, okay, wait. Maybe I need to background. Hey, am I stupid? There should be a setting called like pre-market, aftermarket. Ah, yeah,
Yeah, I
yeah.
know which
It's
one you're talking about.
scales and lines. Scales and lines. It is.
Here's the line
And then there is uh,
all the way down.
no, on my
This
chart,
chart left.
pre and post market. It's called.
Current scale, no overlap plus countdown symbol, previous day close, indicating financials, and low bid and ask day and week. I don't have that. Maybe, maybe if you go to this one, there's no option for it. I don't know. Maybe I could try another asset.
And if I change it on my chart, it's not changing any. Ah, yeah, sessions. Now I can see it. It's in symbol. It should be in symbol. Why is it? Why is it so weird? Go for symbol,
Uh,
and you are on hashtag. Look, for me, I have sessions here. Maybe you need to go for a different asset. So, for example, on Coinbase,
yeah.
maybe you're on the Nasdaq 100. This is like you can see this on 24 hours probably. So there are no sessions, but doesn't really matter. Sometimes you can pull up the sessions to just see the difference because you have pre-market, you have post-market, and obviously you have closing times. And what you see here, you have a 24
Okay.
hour chart, you have no gaps because you are on yeah,
Oh, sorry.
now you have them. And these are the pre and after market. And you see on Coinbase it's the same picture on volume as well. You have those low
Uh-huh.
volume periods, and it seems like there is no volume at all. It's simply because the exchange is in pre and aftermarket, and most people don't trade pre and aftermarket. And also people are asleep, and
Okay.
that's why you have those
That
different
makes
volume
sense.
spikes.
Okay. That's good to know. So going back to this one, if we go with the daily, that's gonna make more. Oh, this is not it. So in this case, yeah, I mean, this is putting like for instance, as you were saying before, right? This wick over here. Well, no, it doesn't have a lot of volume, but I mean, that's an engulfing. Sorry, this candle. It's an engulfing candle. So pretty much it did a good job in order to push the price up. But like in this one, for instance, like there's way more volume, right? And then it just the size of the candle is as small as this one, no?
Yeah.
So would you? I mean, does that make any? Does this gives you any kind of edge whenever you're trading?
The volume
Like,
increasing into the lows is probably a sign that comparing it like especially like the last candle, you need to go for lower time frames to see what this candle is made of. So you can't really from this candle alone, you see we see now that the buy volume led to a positive result. now go for the 1 hour, please, because we have a big wick at the lows. We want to see what this wick is made of. You see the biggest volume, now you see it, the biggest volume was created on the sell candle, not on the buy candle. So big selling is happening here,
Yeah.
but without any context, it's not telling me anything. So I can't trade simply based on that. I need to form a higher time frame thesis. But if you then go for the daily again, and if you look just at like the and zoom way out, you will see that usually volume increases at the lows. So every time we go down, volume increases, and this is oftentimes simply because people start buying bigger, institutions maybe start buying bigger when this happens, and the rest is simply bid up with like retirement funds, DCAing and all that kind of stuff. But volume usually tends
Mhm.
to go up at the lows. So this happening right now at this price area might be a sign that we go for those highs again. I don't want to say this is happening for sure, but this is also a reason why
Yeah.
I don't blindly now scale into a short here. But if you go for those highs again, and if you simply always, if you have a question, the best thing is to answer yourself by looking at historic behavior, because the answer is usually on the
Okay.
chart. So, for example, how I figure those things out, if I have a question, I simply look at prior instances. For example, the Nasdaq rallied 50%. When did this happen before? What did the top look like? What did the bottom look like? According to volume, according to sentiment, all those kind of things. And then you will see that, as
Okay.
said, volume increases into the lows, not into the highs.
That's a good point. Yeah, look at this. Oh my God.
And then also
Okay, so
what you need to take into account is that you only look at the Wanda chart. For example, a lot of volume is also
yeah.
created on the NDX, and as said, those kind of stocks, those kind of things, if they're traded at several different exchanges, you need to take more things into account. That's why I like stocks, because stocks are usually traded on more exchanges, but the main volume usually always comes from US exchanges. And so if I look at, for example, the Nasdaq on Tesla, I got my best data set because most people trade Tesla on the Nasdaq. Um, and that
Mhm.
makes it easy, right? So and I like easy. So trading is complicated enough. That's why I don't like forex. That's why I don't trade indices too much. That's why I don't
Yeah.
tra- that's why I like stocks more than all of those, because it makes it simpler for me for my strategy. But this is all a personal preference, obviously.
No, but it makes sense. I understand what you're saying. Okay, so going back to this, knowing that, if I go to, so let's say, let's talk about this trade. I don't know. I mean, I don't know what you think about this. Um, but basically, there are, so, okay, I am thinking about placing this trade. Uh, this is, price is going down, so I want to short. That's what I'm thinking. Before talking about the volume now, I'm not too sure about it. I wouldn't take this trade at all. Um, but then, so this is the range that I have, in which is going from this high to this low. I mean, I could pull the range from all the way up here, but let's assume that we're just gonna talk about this one range here. And then there is a hidden order block here, 5 hours. And then there's another one that's 3 hours.
Mhm.
And then if I go down to lower time frames, I found another one in the 30 minutes right here. And I think that there's even another one in the 4 hours. Yeah. So there's different options here, well, different breaker blocks. Um, I pull the FIBs from this high to this low. There's this one here, and then zero point 0.5 is right here, which is in the, well, obviously the equilibrium between this high and this low. This is going downtrend, high, low, high, low. Well, didn't break. No, so there's another, it's a lower high and a lower low. So I'm expecting the price to come to this zone for a continuation to the downside.
Yeah, that's
That's
what
what I
I.
have. Yeah, and I'm not even confident. I'm like, okay, but it could not work. It could literally not work. Then what I like to do is I like to go to higher time frames, so I could go like today's, and I try to look for order blocks as a confluence. Like this one, for example. This is like partially, well, this hasn't closed yet. Maybe 12 hours. There's one up here. And this? No, this is not a hidden order block. Oh, this is the way I usually. Wait, no, there's a week here. Yeah, I think there's a week here. Oh no, there's no week. So that's as much as I do. There's some. I see some videos. I remember. I think it was Albert. He was telling us that there is no reason for me not to take this trade, so I might as well just take it because it. I mean, it checked the boxes, but my level of confidence is just not high. Then I would get into the trade, and then I would just check the. I would set up, I would set up alarm. I would wait. I would try to place my entry based on what I think is best, and then I would set up the I'll take profit, and and then I would set up alarm for like the 50% of the fee, right? So like let's say let's go for the 4 hour. Um, I wait for the price to hit, then the price hits, and the price I don't know goes like this. Oh my God, this is so weak. It hits, and then I get into the trade, and then I would let's say the trade continues this way. Uh, I would I would have placed the short like this with a with an alarm. I would do market order, and then I would target the lows, and then whenever this hits 50%, so I would pull the fips from here to here, and then 50% I would set up an alarm. Sorry, 0.5 I would set up an alarm right here, and then when it hits, I go like this. I take profit and go like this, and I just let it run. But while I wait, I'm literally just I need to check my trade every hour or every 30 minutes. So for me, it seems that I don't have confidence that this is gonna work,
No,
and
you
then
don't. You
I
don't have.
can
You
get it.
don't have experience. This is simply because you want to see what happens. You want to see what's going on, and these are mental things. So from a structural perspective, everything makes perfect sense. Um, you just need to ask yourself what kind of trader do you want to become, because playing it like this is very aggressive. And for example, according to my strategy, I would never take a trade like this simply because I can't cover the whole FVG, and this is what I would always do. So if you wanna take a trade like
Uh,
this, the whole FEG should be covered, simply because this is air, so you have no technical resistance within like your stop loss. And then if you put your stop loss there, the trade doesn't look as sexy anymore because it's maybe a 2 hour trade or something. It's never something I would personally trade, but you can obviously
yeah,
you can. The question is what kind of trader do you want to become, and like the whole checking kind of thing is simply experience. So and also for me, for example, if I enter a new trade, I always also check in the beginning, but once it's like and once it's like either working, I'm relaxed because yeah, it's going away from my entry. So what should I do? I just wait, or I getting stopped, and then I'm obviously out of the trade anyway. But like you trade a lot of lower time frame, mid time frame stuff, so a lot of things happen, and you need to be aware. Obviously, you could simply wait for the alert to get hit, but you also want to see what's happening. And as I said, this is experience. This you can get rid of this simply by taking more and more and more trades. And the thing you talk about, yeah, like your A plus setup, will arise from taking hundreds and thousands of trades. You can't expect this happen from taking like 50 trades or something. So you need to take more trades, gain
Yeah,
more experience, and then you will see what are your trades, like what is your type of trading, your style of trading. But as said, in this case, my strategy says fill the FAG with your stop loss at least. And if you do that, the trade doesn't look as good anymore. And then
yeah,
suddenly it's not that much fun. And that much fun to take this trade.
yeah. No, you're very right. Yeah, it should be like something like this, at least like this, and then you take the lows,
Yeah.
and then yeah, I mean, if you go even to like that, then you have the yeah,
You see what I mean?
yeah. Thank you. I mean, yeah, no, totally, totally, totally.
And people
It makes
play
a lot of sense.
play often so tight and they take so many trades. It's overwhelming, especially if you still work a job and all that. I would focus on higher probability setups, where like everything you said makes perfect sense. So we have a break of structure, we are in premium of the swing. Um, but for example, I like to be a bit more selective. I don't need to take trades, and so I wait for better opportunities. And for example, in this case, I would like the supply even more, like the 1 hour level you marked out on the whole supply block up there. I like more because this is the most important structural high, and everything you take within the range, in the middle of the range, could work, but it's not as high probability as taking it up there from the, yeah. And you
So
skip
focusing on
through different time frames, and there were like several order blocks up there, so there is a reason for price to go there. And if you take a trade up there, you can play it way tighter because your invalidation is just above the high.
yeah,
So um and as said, if this structure breaks up there, like the whole idea is invalidated. But if you get stopped on this idea, you could still react from the order block above, and then you think like, oh no, I could have taken this one, or oh no, it's still reacting, because the invalidation basically is taking out this high. And so if you trade the extremes of the range, you increase your probability of being right.
yeah. Do you if the fibs don't match your levels, you forget about oh shit, you forget about taking the trade.
No, it doesn't need to be perfect. Like the line needs doesn't need to be perfect in my thing, but it should be the area, like the area between the 0.5 and the 618, um, is totally fine. It doesn't need to be perfectly on the dot.
Yeah,
Because you go on a different chart, you have different prices, and the fib will look a little bit different anyway on a different
maybe
exchange.
that
I
would
mean,
be better trade. Yeah, this would be a better trade. I mean, this makes a lot of sense. What you just said about the favorite lap, and I should have seen that for sure. Um, Something that I was also mentioning, and uh, probably one of the last questions that I have. Um, Something that I was talking to, well, I was mentioning there in the channel with the white belt, uh, is that whenever I'm taking trades, my account is $100 and I do 1% trade. So every time that I'm trading, it's $1, and I don't feel them all. Like it doesn't feel like not anything. So if I lose, if I lose a trade, if it gets invalidated, I don't like it just because it didn't work. But in terms of money, it's not a problem for me. And maybe I should have better or more. I should feel more attached in terms of money. So I'm thinking of maybe like adding more money to my account so I can do bigger trades. But I don't know if that's a good idea.
I mean, if you, for example, put $500 and you lose $5 per trade, and it makes you feel something while not ruining you, I don't think that $5 per trade will ruin you in the long run, or even if you burn the whole account.
No,
The thing is, the beginning stages are not about making money. The beginning stages are about collecting experience, right? You can collect like theoretical experience simply by taking the trades with $1, but the emotional part is also important. So if you feel like it's a good idea to do that, to learn more about your own emotions when you get confronted with losses or wins, it might be a good idea. But obviously it should still be amount that doesn't hurt you at all. So from a monetary perspective.
yeah. I feel like since now I mean, it's good that it's real money. Um, But since I don't care too much about it in terms of like $1 per trade, I try to make many trades because I want to know how the price is going to react to what I'm doing. But I'm not specifically thinking about, okay, I need to find the A plus trade. I'm like, okay, oh, this sounds that seems pretty interesting. Let's see what's going to happen. I'm just going to play. I'm just going to place a trade, and instead of $1, I go like 30 cents.
Hmm.
So I'm like, I
Hello? Hello? Aristo? I think he's gone. Oh yeah, he's gone for sure. There he is.
and see. I'm sorry, my internet just went out. Just damn, I'm having a lot of issues with the internet.
No problem. So you're back. That's the important part.
Thank you, I appreciate it. Did you hear the last thing I said?
You said about like the money and that you're not bothered, and then you take more trades because you think from one you want to feel more or you want to experience more.
Exactly. So I'm like, okay, what do I do? Because I'm taking trades they're literally not what I'm supposed to be taking. So maybe maybe having a bigger account, or maybe being more like, I think it's something that probably I just need to think about. But like, this is something that I'm going through now. So definitely, I need to take more time or keep it more like serious in order to find the A plus setup.
I can totally relate. So I started my first account with $1,000, my real trading account, because it still didn't bother me like losing $10. But at the same time, if I hit a 3-5 hour trade, it was 30 to $50, which was something. So there was like emotional involvement. The thing is, you
Yeah.
need to know yourself. It's not about what I did or what it's perfect. It's about what works for you. And if like you don't want to build emotional baggage in the early stages simply because now you want to like if you repeat doing the wrong thing, it will become permanent. So make sure you still aim for experience mainly, but if it's better for you to, or if you gain more experience by simply like risking $5 per trade or something, and it's still no problem for you from a monetary perspective, you can simply do that, in my view. If it's money you don't care about, and if it's not leading you to take emotional stupid decisions, and like still keep on playing the system, doing the right thing, you can definitely do that to increase your experience.
Okay. Yeah, no, thanks. Uh, something I need to take into account. And it's a long journey. This is a long journey, huh?
Yeah, it is.
It is. It is.
Best you think in
Uh,
hours, like in hours you spend trading, because people tend to think like, oh, I want to work it in so many months or in a year or something like that. The thing is, it's all about the hours you can put in, the quality hours and the quality time you spend will define everything. And for example, for me, it really clicked after like 3,000 hours or 3.5 thousand hours. I really understood stuff and like getting like consistent with what I was doing. And now I'm at like 5.5K or something, or 5.4 or something like that. And it becomes, I don't want to say effortless, but it becomes like second nature slowly. And I think you should aim for those quality hours. You guys might gonna get there quicker because there's so much quality information out there. I mean, when I was starting, I didn't even know what a breaker block was. And on the money tower charts, you had like these levels that were not connected to the chart. There was just a green box, and I was always puzzling why there is a green box, and I didn't even know what a breaker block was and all that kind of stuff. So I spent a lot of hours simply searching and looking for answers. And nowadays, everything is more or less on a silver platter. So you might as well simply, it takes you probably 1,000 hours less to get to the same point of consistency that I needed. Um, but yeah, in the end, it's about quality hours, and you will need thousands of them. And whenever you can put them in, so it might, for some people it might take 5 years, for other 1 year, for some it might be able to achieve under a year because you can do this full time. Whatever it is, it's about the hours.
okay. If you were in my position in terms of like studying, what I know we talked a little bit about this the other day, but like what would you suggest me doing, like in order to like literally like not master, but like you know, learning the ropes, to continue learning the ropes, taking better trades, being aware of the trades that I'm taking, finding my A plus setups. But then what else is out there? Like what what's your suggestion for me to like keep evolving?
Just keep on doing, keep on taking trades, keep on collecting experience. At some point, you don't need to add more and more variables. It's about improving what you have. Like keep on repeating it. Like the setups, if you want to have A plus setups, if you want to aim for a higher win rate, be selective. Take less trades but higher quality ones. If you just want to get as many trades as you want, like Rambo style, just shooting around, taking as many trades as you can with the right systems, you can still be profitable, but it will take you more energy and more time. But obviously, taking more trades will also increase your experience. And as said, you need to just like play to figure out what is the right thing for you.
Nice, thank you. Yeah. Okay, that's very useful. Thank you for your time. I have one last question. Do you mind pulling the MicroStrategy chart, please? I had a question that I wanted to ask and I forgot. And I know it's about time. And with that, we're all set.
Mhm. I need to close. Wait. Ah, no.
Okay, so you were in the week. I think I don't. You were in the weekly, and then you marked. So you mark the supply zone that is it's with the FIP, like the supply that one. Okay, you marked it just like that? Literally, like how, like what do you see there?
Consolidation, big price drop. So pretty much, first of all, the 0.5, very important. And I simply, this is experience. I simply look at this. You see how price slowly went down, and after here, like it just fell off a cliff. And so this is a very, whales
Oh,
started to sell aggressively here. You see also this little block here, and then whoosh, big FVGs to the downside. And then I could also like jump around 1,000 time frames. But I simply see it. So I look at this and I see it, and the 0.5 just gives me confirmation that this area here is gonna be a very important resistance. Also the $300 level, you see, like taking it back. Oh yeah, MicroStrategy is above $300 again, attracting new buyers, maybe rolling over from there. So, but this is experience. This is about like charting, trading, doing this for a long time, and it's at some point, as said, it will become second nature. You look at it and it, bam, it's there.
if I were to go time frame by time frame marking order blocks, well, I'm actually going to redo this chart. Yeah, never mind. I'll redo this chart. I just want to understand if me make adding or marking order blocks would the graph would look as more or less what you have. But I'll do the I'll chart it. I'm gonna chart it.
Do it and then you can send it to me.
What I'd like to see.
And as said, I think it's more important than like marking every single block and looking at 20 time frames in my view is look at the chart and think about where did whales start to sell, like where did institutions start to sell like really aggressively, and then you will come up with this area here, because this is like where a few green candles consolidation, because every order block is simply made of consolidation, impulsive move, then you have a consolidation, maybe impulsive move down, and this is a consolidation here, even though it's to the downside, it's a consolidation, and then you have like this vertical almost drop to the downside.
Perfect. Amazing. That was useful. Thank you. Thank you so much. Thank you for the patience.
Great to hear. That's what it's for. I think we're gonna do another poll because three people voted for morning and only one really made it through the whole session. And I don't really think that people
Yeah,
understand what this voting then means because if you vote for morning or
yeah,
if you vote for this time, then make sure you're there, right? Because other people would like to have a different time. But yeah,
exactly. Totally, totally.
but I
I'm
think you
fine
can
with this
also.
one or the
Mhm.
yeah the other one. Like it's early in the morning. It's 7 a.m. on Saturday, but I don't mind just waking up and be here. So yeah, either one would be fine for me.
Yeah,
Now it's just Friday, what 9:30. So now I'm just gonna spend some time with my wife. And that's it. Yeah, but thank you.
enjoy your time and enjoy your weekend.
Appreciate it. You have a good day. Thank you very much.
Thank you. Bye bye.
Thank you, sir. Bye.